All right. Good morning, everybody. So China up more than 1.5%. Small caps down 0.25%. Everything else just distributed through the middle. Even Japan near 0.5%. We're going to get a little bit of jobs data today. It's the JOLTS numbers, the take this job and shove it numbers. Anything related to employment you want to pay particular attention to, as the Fed has moved away from everything else and has focused on employment. It's one of the two mandates, right? The Fed always has that dual mandate. So right now, employment is the bigger threat. We did get part one on JOLTS. On the QRA yesterday. Came in at 3 o'clock and not 2 o'clock, but we did finally get it. Markets responded a little bit to it. The proposal is an increase, and if you do a little bit of research on the last time they proposed an increase like this, not the same size, but still an increase, that would be the August into November of 2023. So from basically from here to here into the next QRA, and then everything changed in that November, and we went up since then. So I'm not saying this is going to be the outcome, just that the market didn't like it the last time. We'll see how they like it this time. We'll get the final numbers Wednesday, 8:30 a.m. It is worth noting, if you look at the CVI, net buying continues to dominate. We've been saying this for a little while now, how we've got some really great markets if you're not looking at the indexes, right? Look at equities out there. Some companies are just making really great moves. There's net buying under the surface, and we can clearly see that in the cumulative volume index. It doesn't matter what's at the top of my screen. This indicator is not looking at it. So we could have any market up here, right? It wouldn't matter. This is looking at the NASDAQ. But if you go to, say, TradingView and you look for the CVI, you can load it for all markets, right? Which is pretty cool. That way, instead of just focusing on one individual index, you can look at them all cumulatively. And again, it doesn't matter what's at the top, right? So we just ignore that. That is net buying, right? Pretty obvious. Volume sitting in the 70s again this morning. Is 2 days in a row. It's not out of line. It's not overly heavy or overly light. It's just a good steady flow of overnight volume. We'll take it, right? It's been a little dry, so nice to have that good clean volume. Really tight range implies the market's waiting on something, but we're not seeing any hedging. And we did get an inside day breakout this morning. We broke outside of yesterday's range, depending on how you want to mark that range, right? We opened it gapped up on Sunday night. So technically, that's the low of the week. But if you're running things a little bit different, then where we closed Friday is the start of the new week. Either way, just using the RTH, we've got an inside day breakout. We want to keep that breakout if we want to continue this move to the downside. We finally broke through that 10-day moving average that we were fighting against yesterday. But we're getting hung up on the 3-week moving average. So we got to get through that now. That is the volatility trigger, by the way. That red line here. It's a spot gamma level. So back down to the 3-week, break our own Globex low. Come back to where we closed on Friday, get that gap resolved. Then we've got the ADR half, the 20-period daily moving average, and the put wall, which lines up nice with Friday's low. There's a call wall up there somewhere. There it is. 60.36 is the call wall. It's a long ways off. Really don't have anything to worry about on that side. So it's a smooth shot back up if we can get through the volatility trigger and the 10-week, our own Globex high, then the RTH high of yesterday, then we can focus on Friday's high. Of course, we got to get through the ADR and a couple of options levels up here. Looking at those ADR levels, since we're down slightly, that means we're slightly closer to the lower ADR. But there's not a lot of edge in trying to guess or assume that we're going to go to the lower one just because we're slightly closer to it. We were closer to it in the middle of the night last night, and we still didn't go hit it. This is a market waiting on something. I really doubt that we're waiting on the JOLTS data, right? It's very likely that we're waiting on the second part of the QRA event. And if that's true, it's going to be a very sideways, choppy, nasty day, a lot like yesterday. So if you liked yesterday, you'll love today. It's possible that we can break this zone or this range. We've got Bitcoin moving around this morning. It's a symbol of risk. And if you add in the fact that we've got a lot of the Mag 7 near their reporting time, then it's another reason to expect the market to go sideways, waiting on these big names to report their earnings. So it's possible that we could break out, break down, really expand. News could do that. Unknown news. The difference between that known and unknown news, JOLTS, for an example, is known news. We know JOLTS is coming. We don't know what the number is, but we know JOLTS is coming. So that's a known unknown. A ship crashing into a bridge, that's an unknown unknown, right? It's just something that happened. We couldn't see it coming. So there's always the possibility that news can get us out of this, or 0-day flows could get us out of this. Other than those two things, It's really hard to see that we're going to get out of this range today. With the market waiting on really big data, they could change the landscape of the market for the rest of the year. Like, it's a really big deal. Today's central pivot range is higher than yesterday's, but they're still overlapping. It's a much narrower channel today, but it's still a wide channel compared to what it could be. It could be so narrow that you don't even see the channel at all. You just see the purple line. Obviously, it's not that narrow, so it's not as narrow as it could be. A wide channel implies that we won't break out, or that if we do break out, that the breakout doesn't stick and we come back in again. A very narrow channel implies that if we break out, we could really grow legs and expand on that breakout. Now, these channels don't make price do anything. They're just giving us a little bit of insight on what to expect out of the market today if we get a breakout, which we already did, right? We broke outside of yesterday's range. That is our breakout. But so far, it hasn't stuck. We keep coming back inside of yesterday's range again. So if we do get completely outside of yesterday's range and it sticks, then we need to focus on Friday's range. Now, Friday's range is really inside of Wednesday's range, and all of this is inside of Wednesday's range. So that's really the boss. That's the one that we want to focus on. That is 1023. Everything else is focused inside of this. So we're IX10 now on, I don't know how many days that is, enough. Some analysts will say, well, we've wicked outside of the range, so we're no longer IX10. I'm not in that camp. As long as we close inside of it, I still think we're running the scheme. The issue though is that day is a really big day. Having an IX10 when you're inside of a really big day, it doesn't carry forward with the compression that we would expect or want to see for a good IX10 play. We want to come across that when it's a narrow, skinny day, and then we're stuck inside that for 2 or 3 days. Because when we come out of that kind of range, it's usually a pretty explosive run. There's a trade pattern called NR7, narrow range 7 days. You can search for it, kind of read up on it. I don't think that ES has had an NR7 in a long time, but you could probably find that on IWM or something like that. It's a strategy that you can use on the intraday too. But either way, if you're running an IX10, you want it to be on a very tight schedule, because when we come out of that, it's usually really explosive. So get outside of yesterday's range, challenge the big bar from the 25th. On the downside, if we get through that 20 period moving average, then we'll focus on that 5,800 level from this really big bar on the 23rd. To the upside, get back through the 10, get through that 84 level into the COG at 89, 58.92. That would give us our breakout of this bar, and we can re-challenge this high here at 5,900. There's no expectation that we're going to do either one of these today. It's very likely that we stay within the pinch between the 10 and the 20. And we just maintain this into tomorrow morning when we get the second part of QRA. We are still above the weekly pivot, although we've tested it once already this morning, and we've hit our own daily pivot, so it's not an MDP. We opened underneath that pivot, which pushes us into a bearish posture. It's worth taking a look at the SNR lines to get an idea if they've come in some, they're more compressed, or if they're expanding. You can see that yesterday's lines expand farther away than today's lines, right? This side is more narrow. They're closer to price. Volatility is compressing. The market is sitting there waiting on something. So it's a lot easier to get through the SNR levels when they're closer to us, right? It kind of makes sense. If we continue this fade to the downside, 58.42, a suspected cog line. Below that, the 58.11, 58.32, and 5800 are levels in play. We have gone far enough away from last week's point of control that it may act supportive if we get down in there. Either way, whether it actually does prove to be support, it's where we're going to expect a lot of trading activity. Simply from the fact that the last time we were there, it generated a lot of trading activity. So you could look at it as buyer's remorse, second chance trading, however you unfinished business. Either way, it's where the greatest amount of trading took place last week. So got to kind of have the expectation that if we get back there again, there's going to be a lot of trading again. Ten-day, 30-minute volume profile with the point of control overhead, 58.87. This is a D-shape classic profile, showing that we've got distribution across the curve with the point of control overhead. It's going to act resistant if we run up there. When we were hovering around it, just chopping back and forth, building up structure here, then it wasn't acting as a support or resistance. We were just crossing back and forth through it. But now that we've left that zone, when we came back to it, it acted as a resistance. It's very likely that it's going to do that again if we come back into it. We do have a disagreement between the TPO and the volume profile, expecting to see this resolved at some point through the day today, that one of these is going to shift. And from the way it looks, as we work through the day today and we start getting into this price action in the later part of the day, we could see this TPO move up and they'll be more in sync by tomorrow. It does highlight an opportunity, though, if we make another shot to the upside today. 58.65 may be an area you want to mark out on the chart as an area of interest. We still have the VPOC from Friday, 58.47. It's likely if we continue the move to the downside today that we're going to hit that level. It's right underneath 58.50. So it kind of makes sense that we overshoot the round number and we get into that 58.47. There's a trade called first touch, where you come down and you hit a level like a VPOC and you get a move back in the other direction for a good 5 to 7 points. You know, it's not like we're looking for, you know, a rally back to the previous high a day or something. Just 4 to 7 points moving back in the other direction. It doesn't sound like much, but, you know, 10 to 12 contracts, 4 to 6 points. It's a nice play. We're still holding above Friday's close, which makes sense because we haven't closed the gap yet. That is the focus for the day. If we continue to move to the downside, 58.41.5, Friday's close. Getting that gap closed is the target. It's the goal for the day. At least that's my goal for the day. I want to get that gap closed. Not really looking to crash and burn or anything like that. Just get to Friday's close, maybe overshoot it a little bit and find some supportive structure at Friday's low, or 58.32 cog line, which is just underneath Friday's low. If we were using the liquidity zone, it very likely meets, well, not quite, right? 58.27. That's a little deeper than 58.32. It'll do. We're still holding above the 10-week and continuing that gradual decline. This is a correction in time rather than a correction in price. All we have to do is just stay still, and the 10 will come to us. So it's not bearish that we're moving back towards the 10, because really the 10 is moving up to us more than we're moving down to it. If we break down today, well, then that'll be a different story, and we could correct a lot faster. The correction is the idea that we're going to come back and retest that 10 and get a bit of a reset. Not looking to crash and burn or have a really negative end of year, just looking to reset the game. We are below the 10, but we've been crisscrossing back and forth with the 10 since we finally broke through it yesterday. Now that we've cut underneath it a few times, the 10 is no longer something that we want to look at as a supportive or resistive pivot. As long as we're just around it in a zone near it, then it won't have any weight. Yesterday, it was supportive, right? We came down and we bounced off of that level multiple times. Then we tested it again in the Globex before it finally broke. But now that we've finally broke it, and we've come through it a couple of times, it's not going to be supportive or resistive. At this point, it's like a gravity. And we can see the reciprocative nature. What we get in the bottom, we're getting on the top, and vice versa. Now, once we expand far enough away from the 10, and then we come back to it, it's likely to act as a support or resistance again eventually. But at this point, it's just a gravity or a magnet. It's a good example of holding around the 10, building up a lot of energy, and then making a move away from the 10. It's exactly the kind of idea that we're focused on today. We're holding around it, building up a lot of energy, and you could put on something like the RSI Laguerre, gauge that energy, look for, you know, the market to burn the energy in a move. So being back to the 10, this is the center of the basketball court. We could make a 1.5% move higher or lower from here easily without being overbought or oversold. I mean, a 1.5% move is nothing. So it continues to be a really good market out there. Phenomenal moves in equities. Just the indexes aren't getting any love. So this morning we got solar down. The VIX is down. Home builders. And looking at what's up. What's up? Bitcoin, China ADRs, gold miners, precious metals. And semiconductors. A little bit of semiconductors. The Bitcoin being up offers us an idea for things like Hood, Hut, Hive, Coin, Riot, MSTR. So you got a good group to play against there. Lots of good option opportunities, even cheaper stock plays if you want to run it that route. Plenty of opportunities to play in the crypto space with Bitcoin up. You've also got the China Internet ETF KWeb up. That gives you a chance to play things like Baba, Baidu, JD, PDD, Neo, Lee, XPEV. Yeah, Futu is another one, lines up in that list well. And JD's up, more than 3.75%. Neo, more than 3.5. Billy, 2.5. So a lot of names in that space. Just remember, we're not ready to go long China with, some time and size yet. This is more about just getting some short-term trades in, playing what's moving today, not looking, to run a lot of this back up because we're not there yet. Precious metals, silver, gold, all of those, they got a little bit of a smackdown after hitting new highs. Well, not all of them hit new highs, but nice digestion. Now we're setting up like a TRB. So a trend line breakover implies that we can run it back to the top. For silver, getting through 32 and above that into 36 as a longer term swing is still on the table. Just very likely isn't going to make the whole move all at once, right? Especially when we've got levels to deal with. Uranium trying to do the same play, TRB, or a little bit of a scoop pattern like back here. Pot stocks, which still have an event in the later part of November. I think it's going to be in Vegas. What could go wrong, right? But what we're not seeing is what we need, and that's the Mag 7. A lot of good financials. We don't have that either. If you're going to have a rally day, you want to have those three sectors: XLF, XLK, XLY. Now, you know, you can swap some of those out. You take XLK and put in XLC, right? Like communications or IGV. You can mix and match these ETFs. It doesn't specifically have to be XLK. And a lot of times I just use the NY FANG or the MAG 7 ETF and just sum all of those together, right? Because if we don't have the MAG 7 or the FANG Plus index, then we don't have a market that can run. Those 8 to 10 names can carry the other 490. But if those 8 to 10 names aren't playing ball, the other 490 can't move the indexes enough. So we can see a sideways NASDAQ, S&P, IWM just chopping a lot like yesterday, while we have the rest of the market, 490 something names, making decent moves. So the kind of day trader I am, focusing on the indexes every day. The number one question I try to answer every day, what's the S&P going to do? And by proxy, maybe what's the NASDAQ going to do? Because it's what I want to trade first above anything else. Knowing it's going to be a day like yesterday is a game changer. One, if this is all you want to trade, you know that you're not going to get a trade today. Go do something else. Or two, if you're willing to trade something else, go trade something else, right? Oil, gold. I mean, they had some good moves yesterday. Trade equities, pick a product over there and trade it, right? That if you know that the S&P and maybe even the Qs is going to have a day like this again, go do something else. And I know a lot of people trading in SPY and QQQ options all day long, struggling, looking for a day that offers opportunity like this. And they end up with a day that gives them that. And they say, wow, I got my butt handed to me today. I wish I'd have known it was going to be a day like this. You do. I'm telling you, it's going to be a day like this, unless we get some news, right? I can't predict the news. So really simple. You've got a Globex range. It's ours. You have one every day. Got to get outside of this if you're going to do anything today. If you can get outside of that, then you focus on yesterday's range. Well, we're already out of it on the bottom, but we'll leave the mark on the top. Get out of that, then you can focus on Friday's range. And when we look at Friday's range, this is a lot to offer, right? From high to low, that's a pretty good range. 70 points-ish, 60 from high to low, but we're closer to the middle than we are either edge. So got to get outside of our own Globex range to the downside, test Friday's low, and then we got a chance to run it up from the 58.30, 58.40 area back into 58.80 area, right? It's a nice 40-point run. Got something to work with there. Even at the very least, if we can turn around from our own Globex low and start to run it back up, then we're talking 58.50 to 58.80. It's a nice 30-point run. I'll take that. So, you know, adjust your expectations. It's very likely going to be a tightly wound range with a market waiting on data, not willing to commit to anything till we get something from the MAG 7 and we get QRA tomorrow. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.